What's up everyone, it's Scotty with MoneyVest. So in this video, I wanted to break down exactly the one factor that is playing probably one of the biggest roles when it comes to Tesla and ENPH stock. It's not playing such a big role in other parts of the market because other technology stocks and of course other core tech and Magnificent 7 companies have done really well. Almost all of them are trading at an all-time high. Almost all of those Magnificent 7 companies have at least a $1 trillion market cap, if not more. It's only Tesla that is struggling right now to getting up to that level. It's been trading in a downtrend. It's been getting hit left and right with a lot of these downgrades and price cuts and whatnot. And of course, with the earnings coming out, it was down over 12%. And ENPH is kind of like in a very similar situation because 2023, Tesla was up over 100%. ENPH had a brutal year, and that is continuing for both ENPH and Tesla this year as well. So I'm going to break down exactly what that one factor is, and we're going to take a look at those technicals. I'm going to pretty much show you why I believe this is a very big sort of factor in these two stocks and why others are not as affected. And as always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining. 5 more days left if you want to take advantage of that discount, annual discount with a couple more spots left. With the link down below, you get access to all the buy and sell alerts, options alerts, trade ideas, as well as all the intrinsic value, fair value spreadsheets, and all the members only private videos as well. So link's going to be down below. So the one thing that is affecting Tesla and ENPH, in my opinion, more specifically, is going to be the yields, the 10-year treasury yields, more specifically, because if you simply take into account where the 10-year yields are, and I'm going to highlight that for you very, very quickly so that it becomes really clear with respect to where the yields are and how ENPH and Tesla stock is trading right now. So if you come over to US 10Y, that is going to be the 10-year yield, 10-year treasury yield on the government bond. And if you click on this, right now it's sitting at well over 4.15%. So that is the current 10-year treasury yield. Now, if you take a look at basically where we were back in October, of course, the yield was at just over 5%. That was pretty much the top for the yield, more recent top. And since then, of course, we have seen a significant decline. Now, what happened exactly going back as far as October? So if you go back October 23rd, take a look at October 30th for Tesla. It bottomed right at around $197,200, and then take a look. A rally all the way up to $260, right? So that's right here was a rally of 34%, while the yields were dropping over 24%. Now, this may be true for other stocks as well. So for example, if I go over to Apple, I believe October 23 all the way up until December, it had a very strong rally. So once again, people might argue that, oh, Caddy, like this is not Tesla ENPH. It's literally just the same thing for a lot of companies, right? So if you take a look at Apple, up 20% in that time period. If you take a look at Amazon, probably a similar situation where it was pushing higher from October all the way up until that December period. So Amazon was up over 19, close to 20%, getting up to over $200. Actually, that was still Apple here. It's just taking a couple more minutes to load. But the bottom line is a lot of stocks did perform in a very similar pattern. Now, what happened after is the real question. What happened after is what I'm really here to discuss. And if you take a look at October here, so pushing up 30% since December. And of course, NVIDIA, AMD, we've already studied. Meta, Google already trading at an all-time high. Microsoft at an all-time high. So a lot of those companies traded in a very similar fashion ever since October peak on the 10-year treasuries. They dropped. And of course, a lot of these stocks, including technology sector, rallied back higher. But if you take a look at both Tesla and ENPH and how they have done since January 1st or December 29th, basically, so towards the end of last year, beginning of this year, as rates have started to climb back higher, now look what these two companies have done. So again, this is October 23rd, October 20th time for ENPH, rallied a little bit over 90% from $73 back up to over $140. And of course, since the beginning of this year or end of December, ENPH is down over 23%. And Tesla also is down from those levels, exactly pinpointed. Like if you take a look at where the yields basically started going up, if I go like really on a granular basis, this is exactly the bottom, the near-term bottom for the yields when it basically bottomed at around December 28th, 3.784%. And it's up exactly 10%. So it's seen a very, very strong momentum higher for the 10-year treasuries back up to over 4.1. And it's not really impacted a lot of other sectors because a lot of other sectors are not that interest rate sensitive, right? So if you consider cloud, advertising, smartphones, hardware, technology hardware, streaming, a lot of those companies, semiconductors, they're not that interest rate sensitive as opposed to electric vehicles and solar panels and microinverters. Think about that for a second. Those purchases are certainly financed by consumers, and if interest rates once again start going up, that's getting priced into the stock. And you can see exactly, I mean, December 28th, literally pinpointed right there is when the sell-off began. And the stock price is down 30% from the exact moment when the 10-year yields started going back higher. Now, again, same thing is true for ENPH as well, as I mentioned earlier. As soon as the yield started going up from December 28th, ENPH stock is down. Now, other Magnificent 7 companies are not down. Other technology stocks are not down. XLK, if you take a look at NASDAQ, if you take a look at NASDAQ 100, it's not down. In fact, it's trading at an all-time high. So that's exactly what I'm here to discuss, is that the 10-year yield has a much bigger impact on interest rate sensitive stocks, which includes electric vehicles and companies like ENPH, which are focusing on renewable energy and solar panels and whatnot. Now, if you take a look at some other electric vehicle companies as well, so if you go over to EVs, and again, I'm not saying that this is the only reason. Of course, there's company-specific reasons because, ENPH has been a little bit more weak. I would argue ENPH is more interest rate sensitive than 10-year Treasury, than of course Tesla stock, because Tesla still had earnings to report, and margins, even though they did tick higher from the third quarter 23, there's definitely a lot of slowdown in the overall deliveries and demand, and of course selling of their electric vehicles. So of course there's company-specific reasons, but what I'm saying is the 10-year Treasuries certainly have a very, very big role to play when it comes to how electric vehicles trade overall. So even if you go to, let's say, some other electric vehicle companies, so let's just go to Li Auto or NIO, or for any of those companies for that matter. So again, you'll notice from the beginning of this year, we have just been on this consistent slide lower. NIO's been hitting new all-time lows here, new 52-week lows for quite some time. XPeng, I'm assuming, is going to be in a very similar boat, where it's just been selling off on the back of 10-year Treasuries pushing back higher, which is making more difficult, more challenging for consumers to finance electric vehicles. Now, the moment the 10-year Treasuries start rotating back lower is when I believe both ENPH and Tesla will have that potential to recover back up, recover back to the upside, right? So that's exactly what the thesis really is, that if there's rate cuts in 2024, if there is inflation coming down, if the Federal Reserve decides that they want to cut rates several times, 3 to 4 times, maybe 6 to 7 times, and the 10-year Treasuries starts to roll over, that's what's going to create a lot of that quantitative easing environment. It's going to create that momentum back up for Tesla and for ENPH to recover. So that is one factor to consider. It's not the only factor, but it's one of the most important factors. Of course, there's company-specific stuff that we also need to understand, but a lot of that is tied back over to interest rates, because Elon Musk also did mention this. Elon Musk specifically mentioned that if interest rates come down, then our volume growth can be much higher. If they stay where they are, then we may not be able to achieve a lot of those targets. We may not be able to achieve some significant growth. And that's exactly word for word is what he mentioned. And ENPH also talked about how financing costs is really high. Interest rates are affecting their demand as well. But because they've got pricing power, their margins and their revenues continue to be pretty stable. But at the same time, this is certainly affecting the stock price from a technical perspective, because that's how the markets are sort of seeing that, okay, interest rates are going back up. These are the two interest rate sensitive stocks or interest rate sensitive sectors, and that's why they're getting knocked down. Of course, there's company-specific news for these as well. So just wanted to bring that up to your attention. And again, the main focus here is really going to be on the 10-year yields and where they end up going, because that's really what's going to dictate where these two sectors primarily go. Of course, they're going to play a bigger and bigger role for technology as well, because as interest rates go up, there's going to be more, attention and more appreciation for 10-year Treasuries as opposed to equities, because the risk premiums are declining and they've gone down to like 40, 45 basis points. So if they continue to go back up, let's say to 4.5% or 5%, then yes, equities are going to be in trouble overall, not just these two sectors. But right now, of course, these two are the main ones that are getting affected. But eventually, technology in general could start to feel that impact if the 10-year yields don't stop going higher anymore. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like and of course subscribe to the channel. Link to our Discord and Patreon is going to be down below if you want to really join, of course, be a part of our MoneyVest community. We'd love to have you on board, and I do send out all the alerts and trade ideas. Everything's going to be part of our MoneyVest community. As always, happy investing, and I'll see you all in the next video.